All right, good evening, everyone, and welcome to the Randsource 2026 and beyond. It's an annual webinar that Viv and I do. We are going to pose some questions to you as the audience, and we're going to answer the questions. We're also going to mark ourselves from last year, see how we did in what was a pretty crazy year. We're going to take three big themes, kind of discuss where we see the world at the moment, how we see positioning for the next year and beyond that. And of course, we're going to give away some prizes. So we've got a whole lot of prizes for the best predictors of last year. So we've got chocolates and a whole lot of champagne and some signed copies of books and all sorts of things. So if you participated last year and you think you're in with a shot, definitely stick around for the end for the prize giving, and then we'll have it all couriered off to you. So yeah, before we start, we normally start with a quote. And this year, I think we started with the same quote as last year.
Yeah.
So we're just going to do the same quote again, which is, the old world is dying. Whoops. The old world is dying and the new world struggles to be born. Now is the time of monsters. This was your quote. Tell me about why we're selecting this.
Okay, I mean, I think it's pretty like an appropriate quote. It's like even more appropriate this year than last year. That's where we kept it. Look, the world is changing. We had Mark Carney come out and talk about the fact that we're having a rupture in the global order. We saw how Trump behaved at the Davos, towards the gathering. We saw basically Christine Lagarde walk out of a meeting with, or a dinner with Howard Lutnick from like the US administration as well, because of insults they were going through. We are seeing a change in how the world operates. We've had a very long period of peace from 1945 till now. And I think that, people forget just what the benefits of peace are. And so sometimes when you forget the benefits, you basically don't want to pay the costs of keeping it. And at the moment, the US, I think, has forgotten, how much it's benefited over the last 80 years. The fact that it's much wealthier than the Europeans, the fact that it's the most powerful country in the world. All these things are not, just given. They are part of the fact that it's benefiting from a structure it created after World War II. And now it's kind of blowing it apart. And the danger in this kind of period is that we get people coming about who take advantage of it. And like I said, that's why this is the time of monsters. You're likely to see, more demagogues, more people that are trying to, take advantage of chaos, more people trying to take advantage of uncertainty out there. And unfortunately, these are not great times to be around, if you are caught up in the uncertainty. But it is good times to be around if you can take advantage of the new world's birth.
Yeah, so how do we take advantage? We've got some stock picks. So I've already given you guys the overview. So the one thing is, like I always enjoy, is the stock picking competition. We take everyone in the company. They do stock picks. We mark them. I think Werner didn't do so great. He disappeared. Yaku didn't do so great. He disappeared. Well, let's see how everyone did this this year.
I wonder who's the worst performing this year.
Worst performing this year. So before we get started properly and go and try and highlight it, just so you know, we work with clients in three different ways: securities broking, managed solutions, wealth and advisory. I suppose this is more like a managed solutions presentation. We've got tons of global partners, that our wealth managers use, we use, all over the world. We do a lot of different things. And very happy last year that we got ranked the number one boutique wealth manager in the country. They no longer do the securities broking one. Our securities broking business actually went from strength to strength last year, but significantly stronger. We obviously have that wealth business as well, which is really growing quickly, and we've got the likes of Jethro and Kyle and that all coming in. Gabby almost finished her CFP as well. So, so now year in review. How did we do last year So we're going to run through last year's questions, see how we scored. Yeah. How did we score? So here's what we had last year. So I beat you, and I honestly think that you were cheating a little bit in the way that you marked these questions. There was a lot of disputes about how
we got a third party coming in to get back to me.
how CPI was measured over the period, but I think the big we're going to go through the big themes here. But essentially, obviously, what we do every presentation is Viv is going. If we just disagree on something, we say I'll say one way, Viv will say the other way. And remember, whenever we do these questions, we try and take the consensus forecast of where the market is thinking at the moment. And I think one of the big themes that we're kind of pulling out of this is just how low all these prices were, like how much further the market ran and how hard the market ran last year, which was a surprise. So like I said, commodities always a little bit of a hit and miss. I made a crazy bet on oil. I don't know. Trump said Yeah, drill, baby, drill. Remember, the picture of last year was we were coming in, we just had those November elections. It was US exceptionalism. Everyone is excited about Doge coming in and stripping out wasteful expenditure in the US economy. We had, we had the idea that there was going to be deregulation around tech, deregulation around all business. M&A was going to come back to the table. We were expecting a very, very strong economy. I suppose in the currencies also a little bit hit and miss. These are both commodities and currencies are both incredibly liquid markets. Very difficult to predict where things are going to go. I think the only kind of standout there was, we kind of disagreed on the dollar. I think I remember saying at that stage, like at the dollar index at 110, I felt like too much was priced into it, but there was a fantastic story about the US. And I think that was also incredibly surprising, just how much, the world has tried to distance itself or been almost forced to distance itself from the US. Interest rates also, I think, less hawkish, or more hawkish at least, less dovish than we thought from both the SARB and South Africa. But when we started getting into the growth expectations, I mean that's a lot more tangible, and I think growth expectations also a little bit more easy to predict because stock markets are one of the best predictors of economic growth. It is to an extent a lagging number. When we get into markets and even black swans, I think that's where we really shine. So all the market stuff.
Maybe not. I mean, like we might acquire Greenland. Greenland might be acquired, so that could be wrong.
Yeah. So we're still waiting. But as of this moment, I think we're saying that Donald Trump hasn't acquired Greenland. So we're going to mark that as correct. But I think, like in the black swans, the big one is the black swans are meant to be It's meant to be a year of, black swans are things that we don't expect, but we're trying to flag for you things that could become an issue during the year. We were talking about new nuclear powers, emerging, China invading Taiwan, which has been on the geopolitical landscape for a long time now. But the one that we said an S&P 500 drawdown of 20% or more, and then still obviously predicting that the S&P 500 would finish at new highs. We got that black swan right, which I think was quite a difficult call, and we just made it. I mean, it was that Liberation Day sell-off, everyone taking the initial barrage of tariffs from Trump, when you guys will remember him holding up the board and the weird calculations on how those tariffs were actually worked out and the spurious maths behind it. But the market took it incredibly seriously, enough to draw down the S&P 500 more than 20%. I mean, over that period, we were pushing out new product. I mean, we got some amazing product away in that sell-off, which was great levels. I mean, we're talking kind of like 15+% coupons on some of our structures, which was amazing. It was a great opportunity. But overall, it's kind of a 66% year. So if I look at like what we got wrong with, I mean, what do you think? I mean, shift away from the US and talked a little bit about, but I mean, the boldness of Trump.
Yeah, look, Trump has done things this year that we did not expect. I mean, the whole Greenland thing was almost a joke when he started talking about it. And I put it there almost as a joke, will he acquire Greenland? Will he acquire Canada? The Greenland thing is a lot closer to reality than it was last year. The Venezuela thing, it's a lot closer to reality than it was last year. Panama as well is, I would not, bet against Panama coming into Trump's sights over the next couple years. So that boldness is shocking. The moves he's made against the Fed, for instance, was surprising. He's basically allowed to replace one person in the next term, and probably two if Jerome Powell resigns. He's looking to replace three people. He's trying to get one woman basically kicked off because of quite flimsy means. He's trying to push Powell out for whatever reason, because apparently he did those overrunning costs for some operations at the US Fed building, etc. And those kind of things would really shift the balance of power of the Fed. But the other part of that trade is the taco trade, which is Trump always chickens out. So he does really bold things, and then he stops, and then he takes a walk back, like we saw with the Greenland thing yesterday, where he basically said one thing, initially, and then just stepped back quite, sharply from that. And the problem with this is that the market gets used to this. And maybe the reason he's pulling back is because the market's telling him, we don't, we are worried and, pull back because we're pulling back. If the market stops believing him, he's going to do crazier and crazier things because the feedback mechanism gets worn out to a certain extent. And so that's one of the dangers of this taco trade. But the taco trade is a big thing. The next thing was the scale of movements. What we got here was they got the directions right. We knew the market was going to go higher. We knew gold was going to go higher. We were positive about certain commodities and so on. But we didn't see how big the move was going to be. I mean, if you look at it, gold prices were below $3,000 an ounce when we talked about it last year. The $3,000 an ounce number wasn't, just a joke number. It was a real number we're looking at and there was a question about whether it can be achieved or not. Gold is close to $5,000 an ounce right now. So the move is huge. The move in the S&P 500, all-time highs. The local market, we took 83,000. The market went up to much more than that, like more than 20% higher than that. The movement in, for instance, the Nikkei, the movement in the European stock market, all these movements were in the right direction, but we got the exact quantity wrong.
Yeah, no, they just totally underestimated it. And I think, definitely like the shift from the US. I think, and I think, it's easy to look back in hindsight, and hindsight is always 2020. But, thinking about like the environment when we last did this presentation in January 2025, it was, you would chat to clients over the phone and it was so much optimism around the US could not, put a foot wrong. It was like everything is now perfect. And I think that change. I mean, people were banging down our door for the US stocks and US investments. Now it's almost exactly the reverse. It's been a year of absolute chaos. And I think, one of the themes that we're going to pick up on in a little bit as well is just the volatility that I think we do expect to continue. This kind of, the global economy is a very complex mechanism, and you get the sense that there's almost people in there just pulling out wires, pulling out tubes, going, oh, we don't need that part, chucking it behind them. And at some point, you either make the machine a lot more efficient and a lot leaner, or something breaks. And when it's this complex, there's a high risk that something breaks. And I think that for me is one of the greatest fears that I have around the global economies and global markets at this stage.
Yeah, just one more thing. The reason that we got the shift in the US strong, or from the US strong, was because everything we thought about the US in terms of economic numbers were right. The US grew, the last GDP number from the US right now is 4.3%. Okay, a 4.3% growth rate, and that's a massive growth rate. The US is growing faster than everywhere in the world. It still has all the great technologies in the world. The problem is that what the Trump administration is doing is actually scare the world or irritate the world or whatever you want to say, to such an extent that people are looking at not having the US dollar as the world's reserve currency anymore. People are now basically restructuring, the global, system to basically insulate themselves from what the US might do. And it's not because the US economy is doing badly, not because the US system is failing. It's because the fear around Trump is shifting how the world works. And that is one of the things that we didn't understand going into this year.
So what did we get right? Increased volatility, sell-off and recovery. I've talked a little bit about that. I think our basic house view that AI would continue to lead the market higher. We run two portfolios, a global equity portfolio and an AI portfolio, and the rest of our products that we create under managed solutions really are geared around protecting capital for clients. It's about giving clients options that, in more dramatic market scenarios, preserves capital. Because I think we understand that the first rule is don't lose money. The second rule is don't forget rule number one. And we've kind of identified these two areas. The whole idea of starting Rand Swiss was, under kind of the Zuma years, pessimism around South Africa, and it was to try and find a place of safety for clients. It's in the name, Rand Swiss, linking South Africa to global financial markets. And that's what the business was built on. And since then, we've obviously seen changes around AI and just the excitement of this new technology, and that's hence where we kind of deploying our capital. And we do have quite a narrow focus in these things, and I think that has continued to work very well in our favor. And I think we got right that a lot of people were talking about correction. We always hear the talk of corrections, of markets are going to fall. It's been too much. We're at record highs. Kind of like just instilling that the economy is still strong. Markets should follow. We're in a falling interest rate environment. This is going to be good for stocks. It's going to be good for equity markets. It's probably not the time to pull back and sit on cash. And I think we definitely got that right as well. So
Just we talk about the US basically underperforming last year. The US stock market did well above historic averages last year.
But as you'll see, because Pascal's stock pick was S&P 500, S&P 500, S&P 500 last year. And I laughed at her because she's one of the worst performing people on the desk, because just about all the stock pickers did a lot better. And she said, you are so greedy if you think a 17.5% return is not acceptable. And it is. The S&P, it is still a great return.
It's double almost the average.
By comparison, when you've got gold up 50%, or you've got the SA market, north of 50% up in US dollars, it just doesn't compare. And it's a weird world we're living in. And you do feel that we're well into the bull market now. So these are just the final scores. We always compare Rand Swiss to the audience, to the top forecaster. And I think, there's a couple of things to say about these numbers as well. So we've been doing this event all the way back to 2020. So at least we beat the aggregate this year.
Yeah.
So that's pretty good. That also, there was 2022, and if you guys remember 2022, it was literally a year of just down markets. And I think it's also the size of the audience. It's quite a big audience here today. And I think the audience has grown every year as people come back, they get used to the presentation. And I think it becomes, just because of the size of our audience is that much bigger, you almost by default get, a broader spread of answers as well. So it was only in 2022 that we actually beat the top forecasters.
Yeah.
We were the top forecasters because it's two guys versus a smaller sample size. But when you've got kind of 500-600 applications, it's going to be very difficult for us to. But it is nice to see that we are beating the aggregate, and like Cliff says, and like I've said, all the questions that we're going to face today, we're taking like the consensus estimate. These are none of these questions are layups. These are very 50-50 calls, and it's really a talking point for us to kind of discuss our views around each of the different markets. So we've set a little bit of the scene already, I think, but. Okay, rapid technological progress is one of our themes. And I think that's where we are in the world today. And I mean, you've got 3 points up here, but if you want to take it away, this is kind of your world.
Oh, yes, true. Look, I mean, we are living through one of the great technological revolutions of all time. We're talking something comparable to maybe the Industrial Revolution, certainly bigger than internet, certainly bigger than cell phones. Industrial Revolution, electricity, maybe the agricultural revolution. Some people say as big as fire. So we don't know how big this is going to be just yet. But we definitely are living through something that's unusual. This is, for most human beings, it's going to be the biggest thing in their lifetime, the biggest opportunity to invest in. This year, there are 3 themes that you should watch out for that's really going to drive a lot of stuff in the world. Firstly is the expansion of autonomous vehicles. I think to a certain extent, after many, many years of Elon Musk promising just next year, it's just next year, or maybe even this year, that we have full self-driving. We have seen examples of self-driving vehicles across the US, drive 12,000 miles without interruption or without, intervention. That is the kind of things that we are seeing occurring at the cutting edge. And all that we can see after that is going to be expansion to the rest of the world, where other companies are going to do the same thing, or they're going to license Tesla's technology. But in the next 5 to 10 years, autonomous vehicles are going to become a lot more interesting, a lot more available in the world. And I do think that's going to have a huge impact, things to watch out for. The next thing is robots and software agents. We are, again, at a point where we may be approaching a level in which software agents that are able to do things, like you say, instead of asking a question or giving a query, saying, here's a goal, go achieve that goal. Go and book me this flight, or go and plan this trip for me, or go and plan this party for me and buy the stuff and do all the things you need to do. That's not that far away. And I think that's one of the things you can imagine could be in the world in the next couple of years. If it is, can you imagine how many people's jobs are assistant, or, basically following orders in such a way? It's a huge, a possible disruption to the labor force. And an even larger disruption would be robots. Physical robots doing things in the world, building, manufacturing, cleaning, working in your home. Those are all things that right now may just be a year or 2 away. And that's what to watch out for. And then finally, AI may be at a point where it's creating new science. So there's been examples in the last few weeks where the latest models of, I think, ChatGPT is actually able to do slightly new mathematics. Maybe there's all proofs or something, but it's giving you new versions of the proofs, etc., that are innovative. If we are seeing new science being created by AI, can you imagine a world in which there's new Einsteins and new Newtons and new that kind of stuff? The amount of, change in the world that can come about from that alone is quite dramatic. So those are the 3, I think, technological trends to watch out for. Expansion of a currently existing technology, which is, of course, self-driving, but then also the emergence of new capabilities for robotics, agents, as well as AI.
But I got a question for you around like the robotics and agents. So I mean, I think the standard thinking around this is that when you have software agents that can go book a flight, like you say, assistants are gone, labor force collapses. And there's also the argument to be made that like as the cost of these items decreases, the demand for these items goes up. And, like if you maybe don't need an agent, you might not have gone and done that search for travel if you had to give it to an assistant and the assistant had to go and spend time going and looking at all the flights. But now you have like an electronic query that can go and do that work for you. The number of queries increases that much more. And I mean, it's the whole idea that, when they looked at the Industrial Revolution, they saw conveyor belts and they said, well, humans are going to work 4 hours a day. We're going to have so much leisure time. But what happened is it just drove down the price, and suddenly everything becomes more accessible and you actually work harder. I mean, yeah, I'm interested in your take here. Do you think, with software agents and robots, I mean, are we looking at mass unemployment across the globe, or are we looking at kind of fake employment? Like, what does the world look like in 10 years where software agents and robots have taken care of the kind of the white collar and blue collar work?
Okay, I think mass unemployment is on the cards. Autonomous vehicles alone, and that's a proven technology. This is not something new, something that has to be developed. Autonomous vehicles on their own will disrupt the number one employment opportunity in the world, which is driver. More people, the word driver next to the name than any other tourist profession. These vehicles are here. They're working in places like California. They're working in places like Texas. These are pretty well-developed places in the US. If you're not seeing huge amounts of accidents, etc., happening, you can say they're probably working. Another indicator that they're working is the fact that Tesla is willing to offer you discounted insurance if you drive using self-driving. Think about it this way: Tesla is so confident in how much better its system is than the average human being that they could offer you insurance at a discounted rate because they know that their vehicle is much less likely to crash when using their technology than when you are using it. So the technology is here. All that's required now is the expansion to the rest of the US, to the world. That alone, number one job in the world, gone.
Yeah, so how do we react to that? We get invested in the companies that are going to succeed here.
Exactly.
And that's, as I said, clearly one of our general theses. Okay, trade wars and actual wars. And I mean, we've talked a little bit about, just where the globe is at the moment. I mean, you've talked about the rupturing world order, just how, with the uncertainty that we're seeing out of the Trump administration, the kind of rhetoric. I mean, I was literally doing the arbitrage. I was off work. I was out of communication for 2 working days. I came back, Venezuelan president. God, I mean, this is a crazy, crazy world that we're living in. And I think we've talked about the rupturing of the world order, but the dollar debasement and replacement theory as well. And I mean, we've seen that in the massive sell-off that we've seen in the dollar index recently. And I just can't see that stopping because as that confidence is eroded in what is the reserve currency of the world, and as we start seeing things like BRICS creating the unit, which is going to be a settlement currency, partially backed by gold, but partially backed by the likes, the kind of the main members of BRICS, including South Africa, which is maybe one of the reasons the South African rand is getting as strong as it is. And the idea that countries around the world, I mean, when Russia was frozen out of the SWIFT system, and suddenly everyone's going, wait a minute, we're not comfortable to be part of this kind of US world order. We need other alternatives. I mean, we've seen all sorts of things start to come through. And I mean, I don't know if we're going to see the dollar really recover unless we see a change in the US administration. And even then, policies are continuous, even if we do get the Democrats in. So not so sure on that. I'm interested in that. And then, of course, the return of military Europe as well. And I think that's something that we've talked about, I think, over the last couple of years. European defense, it started with almost like the feeling of, we hope that this isn't going to be the case. And now it's getting to the stage where it's like, we're going to have to start arming. We're going to have to start taking care of our own security. And I mean, this Greenland thing is just, it's just put it, absolutely accelerated it. I mean, your view on actual wars and trade wars?
Okay, there's a thing that trade wars usually lead to actual wars. That's like a famous thing. It's like, when we have trade issues occurring, we do tend to have, down the stream, actual, physical wars occurring. So let's look at the 3 things. Firstly, rupturing the world order. This is taken directly from a speech by Mark Carney. Mark Carney, for those that don't know, leader of Canada, former head of the British, the England Bank of England, former head of the Canadian, I think, central bank as well. So double, central bank head plus, head of a G20 country. Being a conservative, not conservative, but being a laid, how can I say, being a button down, quiet, normal kind of person his whole life. comes up with a speech in which he basically is fire and brimstone saying, we believed in a world order of rules and whatnot. That's not true. There's never been such a case. It's always been about power. And now we must live with that. And we can't ignore this anymore, etc., etc. A very, very, impactful speech, given just how conservative and establishment the person that gave it was. And I do think that is something to be looked at. The problem with these disruptions is, not many people are smart enough to understand. In fact, I don't think anyone is smart enough to understand how everything in the global system, kind of interacts. And if you try and disrupt it to a large enough extent, then the second, third, fourth order effects that you're going to see because of that are just unpredictable. You don't know what the result's going to be. Dollar debasement and dollar replacement, that's about Trump to a large extent. What Trump is doing is kind of changing how much people are willing to trust the US. To give an idea how much people trust the US, do you know how many countries in the world have US military bases inside them? Think about it. You have another country and you say, come around, build your army base in my country. Make me totally vulnerable to anything you want me to do. If you have your army base in somebody else's country, you invaded them already. You just decided not to do anything about it. You know what I mean? And the world trusted the US to such an extent, many countries in the world have let the US build army bases inside their country. That's, I think, changing. The replacement of the dollar, the Chinese obviously have known for a while that they can't live in a world in which they have to use the US dollar as the number one currency. What Russia has shown has proven that to be like the case. Now the Europeans are probably coming to the same conclusion as well. And the difference here is that the Europeans have enough cultural, historic, and other kind of linkages, as well as economic linkages, that they can actually make a real attack on the dollar. Because if you have the Europeans joining the BRICS unit, they would bring along South America, much of Africa will come along, Asia, much of Asia is already in it. And you'd find that, pretty much the entire world would then be willing to trade in a currency that the US doesn't control. And the fact that the US has the reserve currency of the world gives the US trillions of dollars worth of extra money. Okay, it's trillions of dollars because the fact that people just just give the US the stuff, take US dollars, and take those dollars, don't do anything with them but says put them in a vault somewhere. That's effectively a gift to the US stuff for worthless pieces of paper. Okay, if the US no longer can give those pieces of paper for nothing, it's going to impact that economy. And I think that's something to worry about. And the final thing is this. If you ever looked at a map of history and saw how many battles occurred in Europe versus almost anywhere else in the world, it's quite surprising. It's not just due to the fact the Europeans were recording. The Chinese were recording, the Indians were recording, lots of countries recorded. The Europeans had a lot of battles, right? A surprising amount of battles. And until about 70 years ago, 80 years ago, Europeans were at war almost continuously. It was the most violent place in the world. And then they had World War II, and they basically were so scared of what happened in World War II that they decided not to have these wars anymore. And many of the most militaristic societies in the world, the Germans were famously militaristic, not just in modern era, but going back in history. You find lots of German knights and warriors and so on. Effectively decided to become pacifist almost. The Scandinavians, these are the Vikings, okay? They decided to become pacifists. Effectively not having an army, relying on the US protection. That's changed. Now, obviously it's changed for logical reasons, but a world in which Europe is armed again is a different kind of world than the one we lived in. And I think the implications that are yet to be known, again, second, third, fourth order effects that we can't quite predict right now, but will occur because of such a huge move in the world.
Absolutely. Terrifying.
Yeah.
Geopolitical chaos is the result of these actions. And this is kind of where it is. And like you said, we've talked a little bit about the Trump backlash. I'm interested also, the view on the wealth taxes. We know about the wealth tax in California. We've had the wealth taxes floated in South Africa before as well. I think, the wealthy in South Africa are so heavily taxed. The South African receiver understands the Laffer curve very well and understands the risk of immigration and just losing its tax base entirely. But you are seeing the rise of populist politics and the idea that wealth taxes are coming back in, and it's almost this reaction to the kind of right-wing Trump order. It's no, we're going totally the other way.
Yeah, exactly. To explain to the California tax, right? Firstly, it's a tax of 1% per year for 5 years on your net worth if you're more than $1 billion. Okay, that's okay. Well, that's $10 million a year. Okay, $50 million over 5 years. You're a billionaire. You can afford that, maybe. Here's the thing. lot of this thing is on unrealized capital gains. So basically, if you haven't even sold your stuff, you don't have the cash, but you may have a net worth that's huge because you basically were a founder of a company or whatever. Well, then you got to sell the piece of the company, pay taxes on that sale, and then go and pay this tax with the proceeds afterwards. Number one. Number two, the way they calculate how much you own is not about how much you actually own, it's about how much you can control. So the guys that run the fund at Google, like Sergey Brin and Larry Page, those guys control what they call super voting shares. And so they won't be measured on how much they actually own the stocks, they'll be measured on how many votes they have. That's more than half the company. That means that they'll be taxed as if they are trillionaires as opposed to just be worth a couple hundred billion. And in fact, in some measurements, that'd be almost half their net worth would be going to taxes after basically having to sell the Google stake and then paying the penalty. Mark Zuckerberg as well. And the final thing in this is that they are taxing you retroactively almost. What they are saying is that they could have the vote on this thing at the end of the year, but you will be taxed as long as you were a California resident as late as as early as December. So at the end of last year, if you had not immigrated from California and like moved out of California, when this tax comes into play at the end of the year, it's going to retroactively look back and then tax you as if you were a member of California. The same thing is happening in France. France, the leftists have pushed through a bill it was shut down, but it was pushed through anyway by the leftists, to basically have a wealth tax there. This case is 2% of wealth. A minimum 2% of wealth is a different kind of calculation. But there they say if you leave France between 5 and 10 years into the future, you'll be taxed as if you're still a French resident. We're seeing it occur as well in the UK, where popular people are pushing the idea of a wealth tax through. And why is this important? It's because this is partially the Trump backlash. It's partially the disruption being caused by AI. Weak jobs, high growth, high stock markets, people get envious. This is the kind of stuff you expect.
Mm. And then we've got Europe takes the lead, and I want to move on to the questions pretty quick. But I mean, we're talking about a militarized Europe. We said very unpredictable where it goes, but there is a very real scenario here where we see Europe moving back into the driver's seat. I mean, what are we saying here, Boo?
Okay, so imagine the following scenario. Europe gets irritated enough by Trump that they decide to be a part of the BRICS or a coalition with China, India, Africa, South America, Canada, Mexico. Okay. That is a coalition that would basically be larger than the US by quite a margin, would really be able to put pressure on the US. And unlike the Chinese or the Indians, which are also large economies, they don't have the same kind of cachet in places like South America and Africa, etc., to be able to get something like this together. I think if the Europeans led for instance, a counter tariff movement against the US, they would be much more successful than the Chinese or the Indians and other parties would be in the scenario. And if they did do that, it would really shift the world's global power away from the US and towards the Europeans. And this is not even using military force. This is just pure economic and diplomatic power being exercised by the Europeans.
All right. Okay. So that's kind of our themes for the year. Now let's look at the predictions. Okay. So we're going to run through these. They're a little, I don't know, like we're going to kind of try and also pick out themes in the predictions as well. But this is where we've put our block. And remember, you're going to have a link at the end. You're going to be able to run through these questions, make your own picks. And then, of course, we're going to hand out prizes next year if you come back to the event. So gold price to finish about $5,500 an ounce. We're touch away from 5,000. They're both saying yes. Like it's, I don't see. I mean, gold is a difficult one because it's like, I mean, it's been central bank buying. It's been a little bit of the fear trade around, the chaos that we've seen in geopolitics. Maybe it's priced in already. I mean, gold can fall 50%. I mean, it's definitely possible. But I mean, there's also rising incomes in the East. We talk about the love trade and the fear trade. But I think also, you start looking at the size of the numbers and you think, 5,500, that's so much. It's not that much at these levels. You get a move from 5,000 to 7,000, 40%. It's not what we did last year. You can go up $2,000 an ounce now. So I think the momentum is with it. I think both you and me are saying, let's go for it. Platinum, price above 3,000. Viv, you've got a yes, I've got a no. Now, I understand that. Like, I mean, the platinum market is different. I'm sticking with my call from last year. So, because gold is not an industrial metal, platinum is an industrial metal. We know that half of platinum is used in autocats. We know the market is in deficit. Kind of making a fundamental argument around platinum. But what we've seen over the last year is this big rush into platinum, the same as we've seen with silver as well, as almost like a proxy precious metal, and it's been all precious metals. It's been investment demand, almost how can I buy something physical to get away from this US dollar debasement trade? That's kind of been the driving force rather than the base fundamentals. Now, I don't know if I'm going to be right on this. I'm thinking maybe I should switch to yes, but I'm kind of playing the fundamentals again without maybe I'm hedging my bets a bit on my gold pick. But yeah, if the fundamentals come more into play on platinum, I think you could see platinum coming off. But if it's just the same as it was this year, where it's all precious metals, we're just trying to get anything out of fiat currency, then it's going to do well. I mean, you're saying yes. Are you playing the momentum? What are you saying here?
I'm saying that what happened is that gold got valuable enough that platinum had to be dragged along for it. Platinum is a substitute for gold in certain areas. Obviously, platinum had its own particular, niche in the market, which is of course these automatic automobile, catalytic converters. But it also has a role as being a substitute for gold in jewelry and like precious, like it's a precious metal. You have platinum chains, platinum jewelry, platinum coins. Like you have gold chains, jewelry, and coins. If the gold price is hitting like close to $6,000 an ounce, the platinum price is just going to be dragged along to that level. So if you think that gold's going to go to 5,500, platinum should kind of be dragged along with it, especially if you look at the old ratios. Usually platinum is more valuable than gold. So we don't even look at platinum being more valuable than gold, just that if gold is at this level and going higher, platinum should be dragged up a little bit because of it.
Okay. So another one that we don't agree on, again, I'd probably change mine. I'd probably go with Viv if I was copying. The Brent crude oil price to finish above 70. Last year we had Brent crude oil to spike through 90 during the year. So I was looking for some sort of conflict, maybe a bombing of Iran, for example, that might have spiked oil. It didn't. I think we got the Middle Eastern uncertainty right, but not the resultant move in the underlying oil price. We just didn't make it to that 90 level. This year we've got to finish above 70. So we're seeing a materially like higher Brent crude oil price. I'm kind of like trying to learn my lesson from last year, saying drill, baby, drill. Like I'm saying that there's three places that you can allocate economic value. We've still got the Trump administration in charge. You can allocate value either to the shareholders, you can allocate value to the consumers, you can allocate value to the management teams and the people in the businesses. My view is that Trump, it's drill, baby, drill. He wants oil prices as low as possible. He wants inflation as low as possible. Yes, you're going to have more oil coming onto market. It's going to be a supply glut. I think it will spike through 70, I mean, at some point, but I don't know if we're going to finish above 70. I think it's more likely we'll be down closer to 50 by the end of the year, all things being equal, than 70. But Viv, you going the other way. What's your reasoning on that?
The first is Brent oil price, not just the oil price. And, like for instance, West Texas Intermediate or something says Brent oil price. So where does Brent oil prices come or get the pricing from? A lot from the Middle East. The Middle East has two major issues in the world. And that's when we look at Israel, Gaza. Okay, which might flare up again because that's being forgotten, but there's a huge cultural element towards that's going to make it always be just off the front burner if it ever gets off it. It's almost become a cause célèbre culturally around the world, and I think that's going to be something that keeps it always in the mind. But the two main things I'm talking about is the replacement of the Iranian regime and the possibility of a war between the UAE and Saudi Arabia. Okay, those are two things that would really affect the Middle East more than anywhere else in the world and would affect Brent oil prices. A lot of this stuff is transported by the sea with tankers, very vulnerable to any attack. This is just like the easiest thing in the world to do is a small drone could destroy a tens of millions of dollars, maybe $100 million tanker because of the fact that it's like filled with flammable oil. You know what I mean? So yeah, there's a huge amount of danger in this area. But I think if you're looking at $70 a barrel, that doesn't require a lot of fear to get to that level. And like I said, two issues: the fall of Iran, who replaces it? It's not necessarily going to be some nice liberal democracy as we've seen in Iraq and Syria and Libya, and I can go through the list on there. Even Egypt, before it goes the Muslim Brotherhood was taken down. Saudi Arabia versus the UAE. The Saudi Arabians have gotten the Pakistanis on their side. The UAE has gotten the Indians on their side. Two nuclear powers. Not exactly the recipe for niceness.
Will there even be Brent crude oil by the
Yeah,
end of the year?
but yeah, that's the thing
Okay.
to worry about. So yeah,
Okay. Middle Eastern tension. Perfect. Okay. Bitcoin to finish above 100,000. You're going yes. I'm going no. I'm just flipping from last time. I don't know. Crypto. It's just a guess,
yeah,
right? Anything that you've got to say about it? I mean, we were talking about in the office. The only what like if you had to strip out the investment demand for crypto, the only transactional demand for crypto is what? Illegal
yeah,
sites, probably drugs, killing people, buying
money laundering.
money laundering, fake internet subscriptions. It's like, what is the purpose? We have not seen crypto, and I know the crypto bros are going to hate us. You go and put all your hate in the comments for me,
Yeah,
please. But at this stage, like I don't know. It's anyone's guess at this stage. I mean, it's definitely qualified itself as a serious asset class just with the regulations changing. But I think one of the concerns that I have, one of the reasons I'm going no with 100,000, and this might take 3, 4, 5 years to play out, is that this has become very well regulated in the last, say, 2 years. You've had a lot of institutional flow moving into crypto. So you've had formal sector financial capital moving into the crypto world. And yet we haven't seen Bitcoin tripling or quadrupling or 10xing for a long time. That means that doesn't feel right for me. That feels like a withdrawing of the old markets or replacing of the new, more formal markets. And that for me in itself is a little bit of a concern. But yeah, I don't know. Your view, yes on crypto?
yeah.
What's your view?
Okay, it's a couple of things. Firstly, we have seen like this kind of movement in crypto where it goes down, comes back up again, goes down, comes back up again. It may go down another say $20 from here quite easily to $20,000 quite easily. But I do think that the people that are supporting crypto are some of the people that are going to be benefiting from things like the AI boom and that kind of stuff. And a lot of money is going to flow into it because of that kind of stuff. I mean, the people that are getting these huge salaries in AI and so on are some of the biggest crypto, bulls out there in the world, and that's obviously going to help things. The second thing is that if we are in a world in which things like the financial system do break down between, like, say, transactions between the US, China, Russia, and so on, demand for crypto becomes more important in that scenario.
We were talking about this the other day as well, and this was actually a point that Viv made in the office about it. Where he says, if you're really looking at a catastrophic hedge trade, I mean, you go gold, you don't go crypto, because in the world of a total collapse of the global order, the internet doesn't work anymore.
Yeah.
And then crypto is not worth anything. But
Yeah.
yeah, moving on. Okay, silver. Okay, $95 an ounce. The silver has been unbelievable in the last little bit. And if you, yeah, my thesis on a no here is purely the gold silver ratio. I think you said silver should buy you a good meal throughout history, and gold should buy you 1 ounce of gold should buy you a good suit. I
Yeah.
think that's what you say. That's kind of a relationship that's broadly held throughout human history. I think the ratio has just moved too much. I think
Yeah.
silver's a little bit overdone. I mean, Viv, anything you want to add to silver?
No, no, I just think it's been overdone. The one caveat here is that the silver market has more manipulation than other markets historically. So just be careful trying to go short or something on this thing here. It can spike up in ways that are unusual and probably driven by manipulation.
Yeah.
There's always been a fear of the silver market.
Yeah, and it was actually asked in one of my global equity presentations just around like silver and central bank buying as well. And I said, well, central banks don't buy silver, they buy gold. Russia and China, getting involved in the silver market, not necessarily directly through buying physical ounces, but buying silver miners, buying silver ETPs as well. So it's it's an interesting space, but we both got to know on that. Currencies, okay, currency is also like a very difficult one. Rand dollar exchange rate, we've got it at 16.20. I feel this one, I think the broader theme here for me anyway, so I've gone yes, is I think the dollar is probably going to continue to weaken, more or less. I think the dollar is going to continue to weaken. But in terms of the Rand dollar, will the Rand dollar exchange rate move move higher? Yes, I think the Rand is maybe a little bit overdone at the moment. Obviously, we have the MPC meeting next week. We're going to talk about our expectations on interest rates in a second, but I don't know. It's been a big move from 19, and I think like the GNU has glossed over a lot of problems. I think no load shedding, fantastic. I think South Africa is looking like it's in a much better position. Just chatting to people, looking at the chaos internationally. everyone's kind of going, "Oh, aren't you glad you're down at the bottom of Africa?" And you're
Mm,
going, "Yep,
mm.
I am quite glad." But I think a little bit for me again, it's just a pricing thing. I think too much has been priced in. If I had to say by the end of the year, are we going to be up or down from here? Kind of, I mean, we're about 1620 at the moment. I'm going to say slightly weaker. I don't know. The SARB has been incredibly hawkish. I mean, obviously moving the inflation target down to 3% now. I'm just thinking like it's time to give us a little bit of relief. It's time for a couple of interest rate cuts. And there are still fundamental problems in South Africa. We've got obviously politics that will probably affect us towards the second half of the year. I'm thinking a little bit of weakness after a seasonally strong period over November, December. That's kind of my thesis. Viv, you
Okay.
on the currencies?
So Gary's gone basically the dollar is strong against everybody. Okay, so that's just his thesis around here. I've gone, yes, the dollar is strong against no, the dollar is weak against everybody except the rand. So Gary said everybody in the world, dollar is weak against except the rand. I've said the dollar is strong against everybody. The reason being is that I think that we are starting to see GDP growth rates in the US that are undeniably high. We've always had this thing that if AI is real, then GDP is going to have just increase because just the amount of money being looked at here, we're talking about over 1% of US GDP spent on AI. That has resulted in way more than 1% of US GDP increased in total GDP. That's only the way it works out. And we started to see that. The last GDP print that just came out today was, I think, 4.3% or 4.4% in the third quarter of for the US. That's an incredibly high number for a country the size of the US. Understand this. This is way higher than us. This is almost the same as China, even though the US is a far larger, far more developed economy, and per capita GDP in the US is far higher. You start seeing like 5-6% growth rates in the US, the dollar will strengthen over time. It's just a factor of nature. Okay, so that's why I have a different approach to it. And I believe against every currency out there, bet on the dollar versus that currency this year.
Back to us hedging our bets. Um, uh, Interest rates and inflation. Okay, so will the Fed cut interest rates two or more times in 2026? Okay, okay. This is the last one that we're opposite. Then we're pretty much in line on all the rest of them. So I'm saying will it cut two or more times in 2026? I'm saying yes. And I think it's probably a differing view on whether or not Trump's going to get his way with the central bank of, with the Federal Reserve. And yeah, I mean, promoting federal, I mean, it kind of flows into my dollar
Yeah.
debasement trade. I think Trump's going to get it right. I think Powell's going to leave. I think you're going to get more interest rate cuts this year, even if you probably don't need them. And I think it's going to weaken the dollar. And yeah, that's the view. If you say you're going the other way on that specific one, you're saying Fed preserves its independence.
Yeah. Look, I mean, it's like when a child misbehaves, a parent has to be stricter because of the misbehavior. The Fed has to be stricter to basically counteract the misbehavior of Trump. What I mean by that is that the world is now looking at the Fed and saying, is the Fed going to fold? The Fed has to act more hawkish than otherwise would have to not fold. You know what I mean? So I think that is the way to look at it from that point of view. Powell won't resign.
No, he won't
He's,
resign, but he's out in May anyway.
yeah, but out in May as the head, but not as the governor.
It's not as a
Yeah,
governor. Yeah.
that's till 2028 for the governorship. Okay, he's gonna. He normally he would resign after being out at the head of the Fed, but in this scenario, I can imagine he doesn't resign, especially if he thinks that he's here protecting the US dollar. The court case against Trump just by Trump and his administration, that probably won't go anywhere because I think the Supreme Court would eventually come to a point where they'd say, no, this is just too far. Maybe we have to protect the dollar. And so he has one, governor change. He has the head of the Fed, not enough to change the Fed. And like I said, the Fed is going to be by default more hawkish just because it says, my integrity is under threat and I have to act more hawkish to basically contract that.
Okay, but no, even though you've got a hawkish Fed view, you're saying inflation's not going to drop below 2.2%,
Yeah.
even with these high interest rates there. Okay,
Yeah.
inflation, I agree. Also think inflation's not going to drop below that. Part of that is because I think they're going to cut interest rates. I don't think they're going to keep it under control, even though it's, yes, 9 to 18 months forward looking.
Also, remember, tariffs are going to add about 0.5% to
Yeah.
inflation.
Okay. Okay, so this is the South African repo rate drop by more than 0.5% by the end of 2026. We both saying probably not. I think the South African Reserve Bank has been hawkish. I think cuts are coming, but I think two cuts is probably going to be the limit? And if there are three cuts, there's always the chance that we have some sort of disruption, some sort of like rearing up of inflation, and then a 25 basis point hike towards the end of the year as well. So I don't think that's not priced into the market or anything like that, but markets are dynamic and they change. So we're both going no there. Will inflation fall below 3% in South Africa in 2026?
Yeah. Look,
Are we saying this is average? So I said the way I interpreted this last year was, will it print below 3%?
yes.
No. This is like, will inflation running from, so basically the December inflation print. Yeah, will the December inflation print below 3%? We're both saying.
I'll combine this with my previous answer about the rand. If the rand's going to weaken in the year, if I think because the oil prices are going to be above 70 at some point in time, that means inflation is going to be a bit high in South Africa. That means the Reserve Bank, to maintain that 3% target, has to be a bit more hawkish. And there's all of those combined to say no for both.
No for both. Okay, and then we're doing economic growth. Okay, economic growth, I think we're all in line here except for India.
Yeah.
But yeah, China's economic growth exceeding 4.7%. These are, as I said, the kind of the general estimates. Yes, we think it is. Eurozone at least, growth exceed 1.3% in 26, both yes. South Africa exceeding 1.5, both yes. US GDP exceeding 3% in 26, both yes. We're saying economies are going to be stronger. Now, part of that is, I think from my perspective at least, and we'll talk about India in isolation because there's a bit of a dispute there, is that stock markets are the best leading indicator of economic activity. We have had rampant stock markets across all of these territories.
Yeah.
It's the best leading indicator. Economic growth should follow such a strong stock market performance. And these estimates haven't materially changed from last year. I mean, India's a little bit higher, but China also a couple of points higher, but nothing hectic.
Yeah.
I mean, anything you want to add to that?
Okay, yeah, I think we are entering a period in which the productivity in the world will increase, and countries will see GDP growth rising because of that. The US, I think, will be the most positively affected. Maybe China as well, because they both are the big AI centers. But the other countries would see some improvement come through. The reason I said no to India is a couple of reasons. Firstly, the target rate in India is quite high anyway. The second thing is India has a large services sector that's dependent on exporting to the US, which I think is very vulnerable to AI, which might negatively affect them. And also, there has been some anti-India sentiment in the US that may affect things like, for instance, remittances and people like working in India and that kind of cross-border transactions, as well as the fact that I do think that some of the Indian kind of like kickback that we're seeing right now in terms of the political system is going to make it more difficult to grow at this kind of super high rates than the Chinese found it to grow at that high rates.
Okay. Politics. Okay, politics. Will the Republicans retain the Senate and the Congress? No. Okay, I have to speed this up a little bit. Will the DA get an outright majority in 2 or more major metros? We're both saying no.
Basically, they win.
And the underline there is an outright majority.
Yeah.
No coalition government included in this. This has got to be an outright majority. We don't think it's.
They'll win Cape Town probably, but nobody else outright. There might be. We still might see Mayor Helen Zille, but you won't be there just because the DA won more than 50%.
Yeah. Keir Starmer will survive the UK. We got this wrong last year. UK, man, he's like the most hated prime minister of all time.
Since they started measuring it.
Yeah.
He's the worst performing polling prime minister in history, right? So even worse than Liz Truss, even worse than Rishi Sunak.
How did he survive? It was just too many changes too quickly.
Yeah, exactly.
They were like, let's just hold on. We were saying, give us another year. He's gone.
Yeah.
Okay. Markets. Okay, cool. Markets, we'll do quick. Again, I'm kind of like JSE finished above 130,000. Yes. S&P above that. Yes. Euro stocks. Yes. Okay, so we'll deal with the last question now. Viv, the only one that you're saying the JSE not as strong. I'm saying another good year for markets here. Yeah. Interest rates are still, in my view, coming down. Technology is disruptive, and I think volatility is going to be a lot higher with this crazy landscape that we're kind of involved in. But I think fundamentally, technology is there, monetary policy is there, assets must go up.
Yeah.
But you're saying all share index not at 130,000. That's not a huge move as well from where we are now.
Yeah. Look, I think we're talking about like an 8% move roundabout there from where we are right now. I'm saying no because basically we had a huge year last year. And so we have a very high base to work off from the first point of view. The second thing is that I do think that we have not seen the kind of, even though I'm positive on GDP growth being higher than the estimate, it's still a very low estimate. And I still think that we have kind of overrun some of the vibe shift that we saw around the election.
And also, like, I mean, we've also kind of pinning it a lot on gold. I mean, a lot of the South African all share index move has been the precious metal price. If you see an unwinding that, I mean, what, something like a quarter of the index is now gold mining stocks.
Yeah.
So if we do see an unwinding there, that prediction can very easily be correct as well. Will the JSE outperform the S&P 500 in constant currency terms? I mean, obviously, JSE slaughtered the S&P 500 last year. There's no question about that. I mean, yes, we've got this thing, but I think the pricing for me has become, the JSE was incredibly undervalued. And some of those stocks have become more fairly valued, not hugely, because a lot of this has been the gold sector, but I just get the sense that, bad year for the S&P 500 last year against all economies, maybe just a bit of a recalibration, a bit of a moving back in line. Anything to add?
No, I mean, one thing last year I was saying APSA was like really undervalued. It moved up like 30+% since then. So we have seen a lot of movement, even things that were cheap.
Yeah. Black swans. Okay, so black swans is always like the answer to all of these questions should be no. Because
you don't see average yes.
All of these questions should be no, because these are the black swans that we want to kind of draw your attention to. So will the US cause regime change in an African country? We've both said yes. If you had asked us this 2 years ago, we said, of course not.
Yeah.
Who knows? It's a wild world. Will a Chinese AI company, will Chinese AI at least take the lead at any point in 2026? We're going to measure this. There's all sorts of scoring metrics to do it. We're both saying yes. We're both saying yes.
Yes.
Yeah, we're both saying
this relies, by the way, not just on chips, it relies on algorithms.
Yeah.
So it needs to have an algorithmic jump up to see a Chinese company. The Chinese are still behind in the chips. So it needs an algorithmic advance to do this.
Okay, Viv's just going all yes. So will Donald Trump acquire Greenland? You're saying it's done deal.
It might be a done deal.
Might already be a done deal. We might get off this webinar. I might turn on the TV and it might be a done deal. But I'm going no here. I'm going to say no. He's not going to get it from the Vikings. Okay, will Iran's government fall? Yes.
Yeah.
Yeah, I also think so. I don't know how disorderly it's going to be though, but yeah.
These things almost, I mean, we in South Africa,
they're always disorderly, but
we in South Africa were so lucky. It's I mean, when they say it's a miracle, the Rainbow Nation, the miracle, we don't appreciate what we have. Okay, it could have turned out so different, and everywhere else in the world it's been tried to turn out very different.
Yeah, hopefully they learn from us.
Yeah.
Will SpaceX IPO or become publicly available to trade? We're both saying yes. I think SpaceX, there's already a lot of talk around it, whether it IPOs, whether it kind of like moves into a holding company or whatever. I think it is going to be, I mean, already we can actually get SpaceX stock. It's hellishly expensive to do it. You can get it in the secondary market, but still obviously private.
Yeah.
But will it become publicly? Is it going to become a public company?
Either through IPO or through maybe a link up with Tesla or something.
Link up with Tesla, the creation of an Elon Musk holding company. We don't know. I think yes. I think by the end of this year, we're going to be able to get access to SpaceX. And I think it's one of the themes that we were talking about robotics, autonomous driving. Space is an interesting one, and you'll see it in my stock picks.
Okay.
So space is, I think, an interesting theme. Maybe still a little bit early, but this could be an interesting way to play space.
So one thing with SpaceX, right? It's like it puts up 90% of the stuff into space that humans do put into space. So one way of looking at it is this way. Imagine the Earth, right? And everything out of the Earth, 90% of that belongs to SpaceX. How do you value it? How do you value that company? Yes.
For now. I've got another company that does what? The other 10%.
Yeah.
Not quite. Not quite. But so that's kind of the black swans. That's our picks for the year. Please go. We're going to send around the presentation. If you're on the presentation, Pascal will send around the link in the video tomorrow. She's going to put this link up. Please go fill in your things. We'll close these applications probably by, I'd say, the end of the month is probably a fair time to close the submissions. But please go put your picks in. The more the merrier. It just always makes us look stupid. If we can get 500 people to go and fill in this, we're definitely not going to win ever again. But yeah, enjoy. And then there's a whole lot of prizes that we're going to do. So before we get to the prizes, practical application, I'm going to race through this because we're kind of short on time. Global equity portfolio that I run, very much a value tilt. You can see 31% value. I'm only 12% growth, kind of really trying to complement Viv's AI portfolio, looking for the kind of non-AI kind of picks. Not necessarily non-AI picks, but just the good ones, but not with an AI focus. Viv, I mean, you killed it last year. You're killing me every year on your performance. It's getting a bit embarrassing. But I'm very happy because I'm the seed investor in this portfolio, and you've done fantastically well, and that's off to you. I really can't complain with my 110% dollar-based return in like 2 years. So very, very happy. And you can see in Viv's scores up here. I mean, yes, slightly more risky than his benchmark, which is the S&P 500 equally weighted tech ETF, but significantly higher performance, massive outperformance there. Really, really awesome picks. Even though I see Micron up there, I heard you talking to, I think, Lindsay Williams early, saying it was the worst pick in the memory space. Should have taken Sanders. But still, can't complain.
Yeah, I mean, the thing with this particular kind of picks is that sometimes I get the individual stock wrong, but I've gotten the theme so far right. And so Sanders did 1,250%. Nvidia only, sorry, Micron only did like a 250%. So it's 1,000% off, literally. But if you still did, 2.5 times the money, and it's now our biggest holding almost in that portfolio. This, by the way, is an old number. The stock price has gone up 22% since this number has been published.
This number, perfect. So and if you are interested in stock picks, these are stock picks for the year. So we do this every year. So I'm just going to say this is our 2024 picks, all pretty green. And I just want to highlight as well, Viv up 153%. Viv, I'm following you this year. These are 2025 stock picks. So this is from last year. As I said, Pascal obviously taking all S&P 500 and pretty much underperforming everyone except Carl. Now, I don't know about these. Liam put all of this. Liam put all of this together. So some of these numbers might be a little bit spurious. I don't know if he's done them in constant currency. I haven't checked them. I don't know if he took it from the moment of the presentation to presentation or if he took it over the calendar year. But either way, I came second, so I'm kind of happy, and I'm not going to question these numbers too much. Viv, well done. Stock picker of the year 2025 within the company, 129% up. That's 2 years of over 100% performance. You're building some expectation for this year's stock picks. I think everyone doing well. Index picking, like buying indices, buying S&P 500. Everyone except Carl outperformed the index. I'm very happy with that result. Looking at, and I'm looking at Carl across here, and he's giving me dirty looks, which is good. So 2026 stock picks. So this is the stock picks that we've got from the team this year. It's a very diverse, very interesting set of picks this year. I don't know, Viv, maybe you want to talk about, I'll talk about mine a little bit, yours a little bit, but just to kind of pull out the broader themes, like quite a diverse range of companies here. There are not a lot of ETFs being picked. I see Carl did pick the small cap factor ETF, which I do particularly like that. That's a Russell 2000 tracker that kind of pulls out tries to exclude the really garbage companies, the garbage small caps. Also picking Nova, which I think is an awesome company. Barrick Mining Company.
Family again. He just goes for, last year went for his family, this year goes for your family.
Like Carl likes an inside trade. But and then Viv, your picks here. Tell me about cattle.
Okay, so my picks this year are all about energy. I think that if AI takes off and the way we think it's going to take off, it's all going to be about energy. So cattle, so CATL, that is basically a battery maker in China. It's one of the biggest battery makers in the world. They have some of the best technology in the world. Battery technology, not just for basically energy storage and creation with like things like solar, but also robots are going to need this. Cars are going to need this. They are the biggest manufacturer of, towards electric vehicle batteries in China. So I do think that's a huge thing. The next one is BHP, copper, right? I know as well to a certain extent, a big play on copper is possible if we see a big take up, energy demand globally. So copper will benefit from that. The next one is uranium, nuclear power. The next one is SQM. Gary can say the word because he speaks Spanish.
Química y Minera de Chile.
He speaks.
So because he won 2 years in a row, it's getting a bonus pick this year. And what is it?
A lithium miner, world's biggest lithium miner. You can see batteries, and nuclear.
And nuclear. And and SQM is available on platforms. So
Yeah.
even though it is listed on the Chilean exchange, there's an ADR listed in New York, and you can trade it on pretty much all our platforms as well.
Yeah.
So it is possible. My picks, trip.com, nice sell-off in it recently. It's essentially the booking.com of China. It's essentially been penalized for monopolistic practices. So you've got a nice pullback. Hey, you're buying a monopoly. That's a good thing. So I think a nice entry point on that. So getting in Rocket Lab Corp, Rocket Lab Corp space. I think it's a big theme. It's been absolutely running like crazy. Very, very speculative pick, because when you're doing stock pick competitions, you got to get a little bit speculative. Wouldn't fit into the global equity portfolio. Way too speculative, but something to put in there. Zscaler, cybersecurity, also just the pricing looking really good at the moment. So I like Zscaler. And then, just I suppose the broader themes here. Gabby, I think going for, what she uses. She uses Uber, Amazon, Netflix. That's what she's taking. Interesting picks from Brett, one of the traders on the desk as well. D-Wave Quantum, qubits, quantum computing technology, early stage, been doing phenomenally well. If the momentum continues, that's definitely one to watch. Silver, Brett's going with the momentum there as well. And then I think a lot of people looking at the momentum in gold. So Brett got Goldfields. We've got Barrick Mining from Kyle as well. We've got Crystal with Anglo Gold Ashanti. So a lot of gold in there. Pascal also looking at the CATL, which is the battery technology. I think I've been talking around Mr. Price a lot, and just saying that if this NKD deal doesn't go through, and if we see all these activist shareholders coming out, we had Cy Jacobs of 361 kind of hammering the deal. We had Benguela fund managers yesterday coming out approaching the JSE saying they need to class the NKD deal as a category 1 deal because they have to aggregate all the deals Mr. Price has done from 2021 together, and therefore it's not a category 2. It's got to go to shareholders. Shareholders vote this down, that thing's going to pop 30-40%. Almost instantly. I think at least Pascal's been listening to me talking about that. She thinks that there's an opportunity there, and she's been listening to Anthony Clark.
I think she had this idea all on her own.
On Copper,
Don't take credit for
on
it.
Copper 360. We had Anthony's webinar last week. If you haven't watched it yet, I mean, it's a super speculative pick, old Copper 360. But definitely Anthony talks a lot about it in his webinar. Check it out on the YouTube channel. You can go and cycle to that. Jethro, our new CFP who joined us in December, he's got MicroStrategy. So he likes the Bitcoin in there. I think it's going to be super crypto, Broadcom playing the chip sector, Neo as well. Liam, Rolls-Royce. Guy loves planes. How can you not go for Rolls-Royce, Nike, and golf? I think that's it. And Sean also an interesting one there. So Samsung Electronics, Nicepass, and Oceana, 2 local, also seeing a lot more representation in the local market than we have in the last couple of years. Christo, all local as well, which is great to see. So let's see how they do. Best of luck to everyone else. Now on to the prize giving quickly. Okay, so we've actually got, so winner is David Castle. Okay, so we're going to start with I think this is the last prize. Is this the last prize? Yes, this is the last prize. Okay, so last prize, this is going to Nicholas Turin. Well done. Third, so that we'll organize to get sent down to you. Then the second prizes, we've got a tie second. So tie second, we're going to do that, which is, I can't really show you guys this, but they're delicious. So some Lindt chocolate and a signed copy of Nick Mallett's book. Signed copy over there. So we're getting Peter Arby and Jeff Gibson, both getting a box of chocolates and a signed copy of Nick Mallett's book. And then for our winner, David Castle, well done. Definitely will come see you down in Cape Town. Bottle of champagne, some lovely Lindt chocolate, and a signed copy of Rassie Erasmus's books. So well done, guys. Excellent picks. I hope you guys enjoyed the presentation. And if you're interested, go and apply for an account. If you're not a client, send us your FICA, find your account, started. Otherwise, thank you very much for listening. We hope to see you next year.